Okay, guys, next thing is researching loan options. Now, we've been talking a lot about VA versus FHA versus conventional. We haven't mentioned USDA loans yet, mostly because we don't have a lot of rural in our just general vicinity. There is some on the perimeter here of San Diego where people are moving to and looking for. But I just wanted to talk about, the idea that not all mortgages are created equal. In some cases, maybe the one you qualify for is the only one you qualify for, but there might be a case where conventional is better than FHA, or FHA is better than conventional based on the deal. So I want to talk about loan options really, really briefly. What's some of the things that are kind of most prominent when people are talking to you right now, whether they should do option A, option B? What do you find yourself talking to people about most often?
Here's the thing, and I'll take this one first. Here's the thing. It just really depends. Obviously, Mortgage Heroes is known to do a lot of VA because we like VA. And one of the sayings is what you focus on expands, right? So although we're able to do VA, we're very diverse when it comes to it. We're brokers. We're approved with over 150 lenders. We're one of the biggest brokers there is in the nation. We're in the top 5. And I'm proud to say that. In addition to that, we offer FHA, conventional, 203K rehab loans. We offer fix and flips, construction for non-owners, foreign investors. So the list goes on. And the reason for that is because we're so near the border and we're approved in 47 states. We want to be diverse. We want to be able to offer more products. So we're kind of like not your In-N-Out burger where you just have a select menu. We're going to be more like your McDonald's where we have a variance of a lot of choices, right? But we want to be able to be there so that we can provide the best financing option tool for that client. Okay. So we get a lot of foreign nationals that come over here. They just don't have a credit score. We have to find, where to go with this. But here in San Diego, we do a lot of VA, no money down. And we just try to figure out what's going to be the best options with that. When it comes to conventional FHA, some people come and say, well, I want an FHA loan because all they hear is first-time home buyer programs, down payment assistance, not realizing that conventional offers the same. Okay. So once we identify that they're able and capable of putting more than just your 3.5% down, we may and their credit scores come up at a 740, we automatically think you may not be best suited for an FHA, even though the interest rate's going to be lower. But why don't we save you on that 1.75 upfront mortgage insurance? And why don't we lower your mortgage insurance premium from that 0.85 or 0.55% down to a 0.21 or 0.28% with 5% down? Makes a bigger difference in your payment. Therefore, it lowers it. And it just looks a lot better than your FHA.
Can I point something out real quick about
Absolutely.
that? I think there's a misconception sometimes that FHA is only for first-time home buyers, and it's not. That's the first thing. The second thing is if you are a first-time home buyer and you qualify, if you are maybe buying a house for the second or third time, you can still use FHA. And there are cases where you're a first-time home buyer and it can just be conventional. You just jump right to it. You don't have to make a pit stop at FHA Road if you qualify better than that in the conventional space. So don't feel cornered into that. Like you have to use FHA for first-time home buyer. And remember, FHA is not just for first-time home buyers. You could use it if you're buying your second house. Not a second home, not a vacation home or investment. But if this is your second purchase or third purchase and you're moving to it as your primary residence, you can still use FHA. And if your credit is below the threshold for conventional, FHA is what you're going to get anyways.
Well, you know what? I'm sorry. Let me clarify that, actually, Andy. If you owned a home here in San Diego and your job transfers you, say, to Washington, you can purchase again with FHA.
Yes.
100-mile rule.
As long as you're over 100-mile radius from that other property that shows that your intention is to occupy that and your job transferred you that, not a problem. We can go ahead and give you another FHA.
Yeah. Sorry, yeah. So same thing with VA. I know there's some situations where if you get permanent change of station, so PCS somewhere else, and you are already occupying the one here, but you're going to another place that you will also be occupying, then you can technically have two, but that is definitely an exception, not the rule.
Correct. And it happens quite a bit.
Yeah.
One of the things I was going to say was one of the things I've experienced more recently is that when I'm speaking to buyers, they're actually a little bit more aware of the different programs. And I believe it's honestly because of ChatGPT or Google and just the mass information that's out there nowadays. But one of the things that I still, that it's that I still see is that, they can only get so much information and then have to verify it with somebody to see what's true. How does that make sense? How does that connect? What does that mean? But I feel that nowadays you have so much more resources to search up the programs or the options. Then you just need somebody to actually tell you, okay, well, based on your situation, this is the program. But that initial search for a certain type of product, they can have an idea of what they want. They already found that, but then they just need to find the person that's going to help them bring it to life. And that's what I've been experiencing with, certain buyers, that they're already, have an idea of what they want, but they don't really know the whole picture and how to put it together. But they know that there's certain types of programs out there. And, it's not all of them, but I do see a lot more, people having a little bit more knowledge when they're getting approved or talking about mortgages.
No, absolutely. And one of the other things we're starting to see more that's coming up nowadays is actually going to be ARMs. Adjustable rate mortgages. I just had one of our biggest investor and I was like, hey, we have 5-year ARMs. They were very popular back in the day, but because again, the mortgage meltdown, what we experienced in 2008, a lot of people shy away from the adjustable rate mortgages. They're like, nope, I don't want to be caught up like that same thing that was. We got to remember back in that day, it was your interest rate was really 4.5%, but they gave you the option to pay 1%, the negative. And guess what people chose the most?
Yeah, the lowest payment. Yeah,
exactly. Because, but you have 4 payment options. You have that. You have a interest only, a 30-year, and a 15-year fix. So most people chose I'm going to take option 1.
Yeah,
why? Because the difference in payment from that 1% to that 4.5 interest only was at least $2,500 a month in difference.
Yeah, it was massive.
So you're like, I'll take that one. That
this
one
house
good.
For that much? Sign me up.
And so keeping up with the Joneses, everybody did that.
Yeah.
He got us in a mess. And so that's what happened. So a lot of people see, even right now, even though it's being offered and we can offer it, the rates sometimes they're higher with the adjustable rate mortgage.
Yeah.
So it's like, well, I'm already put you on a 30-year fix and we can anticipate that rates will be dropping, who knows, 8 months towards the end of the year, we're going to refinance out of it. So.
And remember, when you're doing research on all these different loan types, you're going to find a lot of things out on the internet that might be general, and that's fine. But when it comes to your specific qualification, you're going to want to make sure that with your loan officer that they're looking at your scenario through the lens of the loan program you're talking about as well, and that those things are going to jive together.
Yeah.
That they're not in conflict with one another. So keep that in mind as you're going through this process of getting approved.
That's right. And a lot of times, based on all the information we've been providing is, one of the other considerations is to shop around. Look at who has the best rates. As a matter of fact, I just talked to a client that's going to be PCSing from Italy, Naples, down to Tennessee. And so, I called him. Obviously, the realtor connected us and said he's already shopping around with USDA, Navy Fed. So I'm like, no, not a problem. So when I talked to the client, I told him, I know you're shopping around, so just give us a shot. And then as you shop, let us know what you feel. And he goes, no, I've already done business with the banks, and I understand that going with somebody who's more personable, understands the market, is probably more in my favor. So you got to understand that. And obviously, if we're the experts in the area, we understand the property tax rate in the area. We understand what the homeowner's insurance more or less estimate's going to be. And you have access to all these people because you've been conducting business in that same area. Therefore, it opens up more windows of opportunity in savings for the consumer because we understand how to leverage those resources.
Yeah. No, good point. Good point.
There's a lot more options when you work with somebody independent because of the fact of the creativity that, you're able to input opposed to a bank that needs to stay within their guidelines, within their own box of, what the corporate structure is that they're running.
Yeah.